Hi everyone, welcome to this video. In today's video, we'll discuss a very simple profitable forex trading strategy. Now in this strategy, simply you will have to apply 200 EMA and you have to just use the 1 hourly candles. That's all. You don't need any other indicator. You don't need to have MACD or ADX or something like that. Okay, you don't need to have like multiple EMAs before you make decision to long it. In this strategy, just apply your mind. So whether we are in an uptrend or we are in a downtrend. In this case, we can see that the market is in uptrend. Okay, so right here I spotted this particular opportunity. In this opportunity, what I can see is the market is retracing back to 200 EMA sharply. Okay, so I would like to see some sort of bounce back on this EMA. In this case, I spotted this bounce back even before it touched the EMA. So I would not wait for it to come back again and touch it, because I know that it's not going to happen. So what I will do is I'll put my stop loss right here at the low of these two candles. Okay, so the target over here is normally 1:3 in my case. So I put a very conservative target of 1:3. So 1:3 is a good target. Okay, so 1:3 risk to reward ratio will make you a profitable trader. Of course, you can have three stop losses after this trade, and if you hit three stop losses, you can make it back in one trade. So this is what it means. So 1:3 is a good target, and this setup involves that you should trade with the momentum. You should not trade against the trend in this setup. Of course, if it would break down here, this will be my second setup, which I will discuss in next video. So what if it breaks down this 200 EMA? What I will do, kindly watch my next video. In this video, only one thing I'm discussing is trading with the trend. Right now my target is below this particular high, because I don't want my position to go here and then come back sharply, and maybe it will come back right in the middle, and then I will exit in the profit, but not that much. Okay, but I want to take the entire profit, so that's why I entered right here at fixed risk to reward ratio 1:3. You can clearly see in the chart that I entered the position on Monday, and I automatically exited this particular position on Tuesday. Okay, and it took near about like 24 hours or something to really get this much of profit. So this particular strategy has generated over the years good profits for me, and frankly speaking, only this strategy is the one that I normally follow most of the times. So of course I will not trade in this kind of market, because 200 EMA is quite far. I would like to see some action near 200 EMA, and I would like to see a bounce back. Okay, since in this case market has already predefined the upside, so in this case I will not trade as per this setup, because market has already predefined many levels, like this is a level, this is a level, this is a level. Right here we have a level, right? So if I make a upside position right here, it will not make any sense, because market is going to resist this zone, because we have a swing low right here. If it breaks above this, then it will try to resist this one, right? Then it will resist this one. So I will not hit 1:3 in any scenario in this kind of market. Only this is perfect example of this particular trade. Okay, so you may can have a perfect example right here. Market slashed above this zone, and it touched here. There is no bullish engulfing. We will wait for the market to show some sort of strength. So strength will be right here, somewhere in the middle. Okay, now we know 100% it's going to break this particular zone. Okay, of course there is no guarantee it is going to happen. Only now we know, looking at the past data, that it has happened. So right here I will execute my position near about right here. I will put my stop loss, and 1:3 will be my target, which is right here. Okay, so sorry, right here, almost here. So although it took many days for it to hit my TP, but it eventually hit my TP, as you can see, 1:3. Sometimes your trades can be so long that you will be frustrated, but don't be frustrated. We executed this trade on 29th of August, and we exited this trade on 1st of September. Okay, so it took nearly the entire week. On Thursday we exited. So quite a long trade, but it eventually worked out in our favor. So you'll see in the past, try to apply this logic and never trade like this, because market has already predefined couple of levels. Okay, so whenever see market has two levels, before I enter a long position, I will not trade, because 90% of the times market will resist this one first, then that one, then that one. okay, it will become impossible for the market to go up. Okay, so I will not make a long position right here. And also the trend is not clear whether it's a bullish or bearish trend. Okay, right here we can see the example of the bearish trend, but bearish trend involves a separate setup. Okay, so risk to reward ratio is different in this case. So I'll be explaining this in the next video. Thank you so much for watching this video. Catch you in the next video.